Good morning, everybody. Kirk Spano here, Macro Dashes. Saturday, December 16th, a little bit of house cleaning. There will be Saturday programs. The rest of the year, those should not go interrupted. I'll also do one on, I believe it might be New Year's Eve day, but there will be Saturday programs. We will miss a couple of Mondays for the retirement income options because of Christmas and New Year's. There will be articles out. And then we'll get back at it the first week of January. So we will have a program in a couple days, but then we're done for a couple weeks. All right, what is going on in the world? Well, the Democrats and Republicans were going to start trying to find some middle grounds on a lot of things. And it has been my thesis that by the 2030s, once we are fully into the baby boomer retirement and the millennials in their peak earnings years, that it shouldn't be very difficult for the United States to run a balanced budget. So with U.S. budget negotiations starting to really heat up, we should see a step towards a flatter budget spent in the United States. Now, we know that they're not going to balance the budget overnight because that would probably throw the world into a depression. But interest expenses for the United States have reached about 14% of the budget. Well, what does that mean? It means we got a pretty big debt, but it's not unmanageable if interest rates are low enough. So what have we been seeing in the last couple of weeks? Well, we're getting warnings about debt, not only here, but abroad. There are plenty of developing markets that have debt problems. I always talk to you about Confessions of an Economic Hitman at this point. It's a book that you should read. He talks about all the bad deals that the emerging markets have taken from the developed economies. It's just another extension of imperialism and of empire that's been going on for centuries. And we probably have a debt problem coming for certain emerging markets, and we need to keep an eye out for that. The emerging markets that don't have big debt problems, they could do pretty well, but sometimes that's priced in. So what I really think we need to look for in emerging markets are nations that are on the cusp of turning it around. I think Argentina is high on that list. They are a wealthy nation in general, but they've been diluted by massive inflation and devaluations of their currency. What you are seeing there with a push towards dollarization and Bitcoinization is, I think, the future of the world. We have 160 central bank currencies on the planet, and probably those don't really need to be there. Central banks typically provide currency for within their borders. Not many of these currencies are used outside of their borders. The exceptions: the dollar is the big exception, the euro, the yen, a little bit the yuan, a little bit the rupee, a little bit the Swiss franc. There's a handful of central bank currencies on the planet that act as types of store of value. Well, the United States has the benefit of geography and of being the strongest nation on the planet in pretty much every way, so the dollar isn't really threatened. All of the other currencies have problems. Bitcoin is what solves a lot of those problems because central banks can't dilute it. It is a true store of value. So when we look at the functions of money and what it can do, if it's a unit of exchange, if it's something that we exchange, couldn't we all just get by on fewer currencies? Do we really need all those different currencies exchanging? What's interesting about that is that the currency market is gigantic. If it could be simplified, if there could be a baseline currency that everything else was measured against, or two, wouldn't that simplify the system? Wouldn't that be good for holding down inflation? Or at least giving you a way to preserve the value of your assets by having at least some of it tied to a currency that derives its strength not only from being finite, but because many nations that own it and use it give their financial strength to that currency. So think about a random currency. We'll call it the wacky widget nation currency. If they devalue and devalue and devalue, people in the country using that currency suffer from inflation. And the currency really is difficult to use cross-border. Argentina is a country that's gone through that. One generation ago, that was a wealthy country. and the socialists ran it into the ground. So a lot of countries that the socialists have run into the ground because, like the Austrians on the other side, the Austrian economists on the other side, they don't understand fundamental human psychology. They want what they want, they believe what they believe, and they don't understand that life, liberty, and the pursuit of happiness, things that our founding fathers really got right, apply to everybody. Everybody wants a better life and for it to be more secure. And motivated self-interest, at the end of the day, rules almost everybody's outlook and approach to life. Think about people in the United States who get irritated with politics, but really aren't motivated to do anything about it. Why is that? It's because 60, 70, 80% of us will go out to vote, we have our opinions, but we just don't have the time to put much into it. We got bills to pay, work to do, fun to have. So anytime that we go too far in one direction economically, whether that's too far to the socialist side or too far to the libertarian side, things get broken. Capitalism with regulation and progressive taxation has worked. It has worked well. We ought to just stop messing with it. Tinkering around the edges. That's all it really needs. So when we look at these huge debts, we have to ask ourselves, how did this happen? And man, is that a big, big thing to unwind. I'll give you the summary version. Under Ronald Reagan, the United States cut taxes dramatically, but also increased spending. Maybe that was our chance to lower taxes and hold the budget the same, and things would have turned out differently. But there's people who worked for Ronald Reagan who are still running around saying, look, the thing we screwed up is that when we lower taxes, we increase spending to get the deal. And thus began the era, the two-generation era of massive debts in the United States. And the rest of the world pretty much followed suit. There are only a handful of creditor nations. China's about even. The oil-rich countries are creditors, and pretty much everybody else is a debtor. Now, in the United States, because the dollar has historically just been so incredibly strong, the debt served to hold the dollar down. After the financial crisis, I wrote a series of articles. It said the dollar would go on an extended bull market run, and I forecast a balanced budget in the 2020s when we were energy independent. I was a little naive. I thought about demographics. I didn't realize at the time that it was probably the 2030s that we ran the balanced budget, if we choose to, because that is when the lines crossed for the baby boomers essentially starting to die and the millennials being at peak earnings. So all those social obligations, welfare, Social Security, Medicare, Medicaid, start to dissipate in the 2030s as the millennials are at peak earning years. And as we've learned, full employment is going to be a real thing for a long time. One of the things going on right now, the Democrats, if they're smart, get a couple of things out of this, is that we are going to finally start enforcing border security. Hopefully it comes with making all the dreamers citizens and all the people like them at least on a path to citizenship, and a lot of work visas and green cards and asylum requests that are granted. But at the same time, they build the infrastructure along the border to say, hey, if you want to come in, that's fine. We're going to put a giant or several giant American embassies along the Mexican border. Not sure which side of the border it would be on. Hopefully Mexico side. That way people don't die in the river. Say, hey, go apply. And we have a whole bunch of hotels here for you. Nicer way of saying dorms, I guess, or hostels. All these things work together when it comes to the budget because immigration has a direct impact on employment. And what is the Federal Reserve's dual mandate? High employment, low stable interest rates. So if they can cut an intelligent deal here in coming weeks and months, we will be taking another step towards balancing the U.S. budget. Will they pull it off? I think so. I don't know so. Will it have to be tweaked over and over again in years to come? Certainly. But it all gets tied back to what happens with the debt being high. And what's the easy answer that has to happen with a high debt? What has to come down? Interest rates, right? So the Fed's pivoting to lower interest rates, even though inflation isn't gone. It starts to make you wonder if some of the things that I've been telling you are right. That maybe we should have been thinking about not just the interest rates, but the QT and what the Fed was going to do once its bazooka was loaded again. Well, one of the things they're going to do is stop the QT next year. to add liquidity back to the market, as well as lower interest rates. And I think that interest rates will come down faster than on a glide path. And if you watched Jerome Powell the other day, you heard him say, when it was time to raise rates, when we finally realized it, we did it fast and we did it hard. A phrase that you've heard me use for a couple of years, fast and hard. I think it's funny, and it is a little bit, but the reality is that when the Fed had to move, they moved. Just like last year, when commercial real estate was a problem for a hot minute, bankrupted 3 banks. The Fed jumped in with a, don't call it QE, it was a special facility to bail out the banks. Now, the debt's coming due next year, over $1 trillion, half of which are underwater. And it looks like that the hole in the bank balance sheets will be between $500 billion and $1 trillion sometime next year. Because the commercial loans that are coming due with interest rates being higher are difficult to refinance because they got these loans when interest rates are lower. And more importantly, COVID brought about something that was going to come about anyway, but it came about much faster, which was work from home. It's been apparent to me for a long time, since I've worked from home since 2016, that work from home, or at least a hybrid schedule for white collar workers, especially technology workers, which is about 1/3 of the population now, the working population, would start doing a lot of work from home. Why commute when you're just going to work on a computer anyway? So now we have all of these office buildings, A, B, and C, that don't have any people in them. Interesting to me is that some of these Class C office buildings, they're tucked into neighborhoods, right? It's the corner building at the edge of a subdivision or just on a city street. Just like the corner stores just became houses and apartments, you're going to have another wave of Class C office space that becomes people's homes with a little office out front or a little shop out front. I think that's kind of neat that that's coming back. I might do it. I really want to build a house, but if I can find the right neighborhood in the right suburb, one of those little downtowns that they have that has like 3 coffee shops, 2 bars, 5 restaurants, a couple boutiques. Hey, if I can buy a building where I get to live in part of it and run Blue Mound Asset Management and Kirk Spano Publishing out of the front, so I have a sign up to walk downstairs or through the house to get to, that'd be kind of neat. I've always been kind of an urban guy, just got tired of the cities. It's weird, right? I like cities, but I don't want to live in them. Part of getting older, I guess. So we have commercial real estate. It's got this huge wall of bad maturities coming in 2024 and 2025. A little over $1 trillion both years. Occupancy rates are down around 50%. When these were made, when the loans were made, they were at lower rates, 2019 and 2020. Remember, real estate loans are generally 5-year loans on the commercial side. Looks like 95% of them. It's very rare that you see a 10-year loan, or some of the USDA stuff and other government stuff could be 20 years if it's a favored industry, a menace. So what does the United States need in 2024 and 2025 with dual problems? High debt at the federal level, because moving towards a balanced budget hasn't really happened yet, in a wave of commercial loans, commercial real estate loans that threaten a lot of banks. There will be a don't call it QE special facility next year. So not only is the Federal Reserve already making noise about ending QT, you're probably going to get quantitative easing by another name. Janet Yellen gave remarks not only about the debt this week, but also about the China economic relationship. What was one of the things that I talked about when President Biden was elected? Some of you will remember this. I said that he was going to put the screws to China, Saudi Arabia, and Russia, and then try to negotiate deals towards the end of his first term. We are seeing that with both Saudi Arabia and China so far. And once they get this Ukraine military aid package through, you could see a deal with Russia. Because it will become apparent to Russia once that bill is passed that they have no hope of taking Ukraine and holding it. I saw an interesting article on Substack, and it was half right, as a lot of these articles are, which is why people read them, because they get their grain of truth, find their rationalization for their worldview. And it talked about how the United States was guilty of leading Ukraine right into this war. Now, I think that was the half right part. I talked about this way back in 2014, that the United States should have been talking about making Ukraine more like Switzerland, between Russia and the West than trying to pull it into the NATO sphere of influence. This guy made the same argument. But then he went on to say that we should just abandon Ukraine, let it all fall apart and see what happens. Well, that's bullshit. That is somebody who's breathy, who gets it half right, and then jumps to the absolutely zucking wrong conclusion on how to fix things. What you're about to see is this aid deal for Ukraine go through, put pressure on Russia and Putin, which they've lost, 300,000 people, either dead or maimed? I'd have to double check, but it's a big number. They can't possibly hold Ukraine even if they take it. There's a deal to be made there. Did you know that less than 2 weeks into that conflict, Ukraine and Russia actually had a deal for a ceasefire? Do you know what shot it down? It was literally neo-Nazis in the Donbass region that threatened Vladimir Zelensky and said, you do not end this war. And the United States, and you'll find this in testimony, using this as a way to weaken Russia. And we have set their military back over a decade at this point. We've wiped out tons of their tanks, their munitions, a lot of dead people, a lot of evil in the world going on. Eisenhower told us to watch out for this. Beware the military-industrial complex. When a general who led the Allied forces becomes president and tells you to watch out for the military-industrial complex, it's a thing. So as an investor, I asked myself, okay, so what next? Are all these military-industrial complex companies set for a giant rally? I don't think so. I think it happened. I think when this conflict is over, things flatten out again. Because what do we know about the trend of warfare in the world the last 50 years? Been trending down. Fewer and fewer boots on the ground, with a little uptick here that we had because of Ukraine and now Israel. And the Israel-Palestinian problem has a solution as well. The answer's been out there for 2 generations at least. Saudi Arabia backs it. The 2-state solution will come back. The UN will have to be involved. And if they're not involved, then they can just shut up while telling everybody what they think. So if the UN isn't going to put in peacekeepers, especially in the Gaza, probably for a generation, then what are they talking about? Oh, that's bad. Yeah, we know it's bad. Yeah, it's bad. We know it's bad. They keep fighting. It's bad. And right now we don't like that side a little bit more. Yeah, who cares? You want to fix the problem? Do a 2-state solution. Put some UN peacekeepers between Israel and Gaza City. There, fixed. Do a massive rebuilding plan that gives people a place to live. Give them a little extra farmland at the edge of Gaza. I mean, come on, people. All this stuff can be fixed. It probably will be, because it seems like everybody who went back to war is kind of tired of it pretty quick. So what does that mean for investment? It means that the rebuild, the whole rebuilding the world thing that I've been talking about for a decade, in fits and bursts, continues to happen. And how will the rebuild happen? Well, it'll be greener. We know that. All sorts of things coming, folks. So when you think about dystopia, when you think about all the bad things in the world, realize that your context should be that the world has been getting better since the Dark Ages, and that's probably not going to change now that we have technology that does a lot of the shit work. We are moving towards a world that is more profitable, that is more egalitarian, is better fed, better housed, better energized. It's just that we have greedy people out there, motivated self-interest, with lower ethical standards, that zuck it up from time to time. They throw monkey wrenches in there. So we go in there, we take the monkey wrench out, and we fix it. Meanwhile, everybody goes, oh, it's broken. Yeah, we know sometimes it gets broken, and then we fix it. And that's what you're about to see with the United States budget. That's what you're about to see in corporations. That we're facing labor shortages. Just going to give everybody a trusty, hopefully doesn't eat them, AI special assistant. If you take a step back, you get over your cognitive dissonance about all the bad things, you realize that the context is we're still moving in the right direction. So the Federal Reserve is going to start using that reloaded bazooka that I talked about 3 years ago. Can't do math. 2 years ago. 2 years ago, told you they'd reload their bazooka. In 2024 and 2025, they're going to use it a little bit. And what will you hear from people that just constantly say the Fed is dumb and the federal government is dysfunctional? What will they say? The Fed balance sheet's going to get $1 trillion bigger. Oh my God! It's so bad! Blah, 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 blah. Buy my rag. The Federal Reserve balance sheet. Boop, 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 boop. Doesn't matter. Boop, 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 boop. because we could pay it off over 1,000,000 years if we want to. It's money that we owe to us. Doesn't matter. Japan proved it. Japan is 40 years. Japan is 40 years in the QE. Does not matter. Because why? What did John Maynard Keynes remind us of? In the long run, we're all dead. So get over it. It's not your household budget. You can't tax people. You can't carry debt for 100 years because you feel like it. The government can. So presuming President Trump doesn't come back as President Trump II, the Trump tax cuts are mainly going to expire at the end of 2025, and they'll probably negotiate to have the standard deduction stay up higher, but everything else pretty much go away. That means that the tax cuts that benefited 98% of the people will stay, and the tax cuts that benefited 2% of us will go. And there will be some tweaking, to do with corporate taxes and other stuff. But you're about to see the tax code get a little bit more progressive, which is what it should be doing. All these people that talk about a flat tax can't do math. Just sounds like a great idea. It's not. I mean, the only way a flat tax works is if you have a huge standard deduction and that the flat tax is like 35%. That could work. You don't tax anybody anything on like the first 50, 60 grand that they make, but then it's like 35% of every dollar after. If you want to make the budget work, that's how it would work. How do you feel about that? Hits the people between 50 and 150 grand the hardest, right? The lowest end. Because the more money you make, the less it changes your lifestyle. In any case, the Fed's going to use its bazooka because too much debt, too much commercial real estate debt. It has to be refinanced. So rates will come down and liquidity will be increased. I don't call it QE, it's a special facility. This is FS Insights 2024 forecast, 5175. I think they're being shy. You saw what I talked about in the Global Trends ETF report. There is nearly $2 trillion that's in money market accounts right now that's not normally in money market accounts. When interest rates on money market accounts go from 5% to 3%, which is what I think is going to happen next year, a lot of that money is going to move. Some of it will move slowly, some of it will move quickly. There'll be a bad month when the banks start lining up for their special facility, don't call it QE. That'll probably be a great buying opportunity. Stock market's a little overbought right now, but we know that it can get a lot overbought. There aren't really a lot of signs for the stock market to pull back until end of January, February, March, sometime out there. And then when it does pull back, you'll want to buy. Because not only is the stock market probably going up next year on liquidity, we have a wonderful wall of worry to climb. And even if President Trump does win, they'll come with a momentary euphoric rush. And then, of course, we'll have a financial crisis a couple years later. That is the one thing that would really push me to open a hedge fund. So if President Trump wins, I think that we get our baby boomer financial crisis sooner than later. If the Democrats are a little bit more in control, win the presidency in particular, I know buying the Congress being kind of tight. I just worry about the big bad things that can happen in foreign policy that have knock-on effects, like empowering Russia for 4 years and then, they start war. There's a couple different ways things can play out that are most likely, and then 1,000 ways that are not as likely, and one of them, those probably happen. I think if President Trump wins, we get a financial crisis sooner than later, but it was probably the financial crisis that was coming anyway, so who cares? Next year, stocks probably go up, then come down, then go back up. And I think if this wall of money hits the stock market, like I think it's going to, because of lower rates, you could see, instead of $240 billion coming out of the stock market, which is what happened this year, even though stocks are up, imagine if $1 trillion went into stocks. I think there's a possibility that by New Year 2025, give or take a few months, we might be seeing an S&P 500 that is up around 6,000. If we get another 20% plus year on the stock market, then you are setting up for a heck of a correction. We'll see if we smooth things out or if we do our typical pump it to the moon and then crash land. We'll see. Hard to know. The healthiest thing would have been for this year to be a digestive year, but it wasn't. The healthiest thing next year would be for a digestive year. Probably won't be, because we binge eat, we binge drink, we binge vacation, we binge TV, we binge the stock market, and then we throw up or our eyes start to hurt. It's the way we are. Another product of humanity, our psychology. This is Tom Lee. He expects the valuation of the stock market to rise, Earnings next year are forecast to be between $240 and $260 on the S&P 500. I'll take the over. I think that the incremental gains from the use of AI next year really start. Wage increases have flattened out. Employment is stable. I think you're going to see not only EPS of 260, I think it'll probably be closer to 270 or 280. And I think that the PE ratio will jump up to 22 or 23. But let's do a little math. Pull out the handy dandy calculator and say, all right, let's say 270 is earnings times 22. Almost 6,000. Say we get to 280 times 23. There you have it. Now, should the PE ratio be that high? Well, historically, over a very long period of time, it's been much lower. But in the last 20 years, 17, 18 has been pretty normal. Maybe that's a product of the fact that we live longer. I don't know. Makes as good a sense as any. Am I saying that the stock market will get to 6,000 next year, thereabouts? I'm not saying that it will happen. I'm saying that it's likely that it could happen. You could see a major euphoric rally, which would be good for the politicians in power, into the end of next year. Again, will it happen? I don't know. All sorts of monkey wrenches that could get thrown in. But valuations, when you strip out the Magnificent Seven, are fair for large caps, low for mid caps, and dirt cheap for small caps. And in the last month, we've seen that start to reverse again with small cap and mid cap leadership in the market. And that's probably where the biggest money will be made next year. I think the easiest stocks to buy are the ones that are going to go from micro cap to being on the Russell 2000 and into IWM and all the copycat ETFs. And then the next easiest one is to buy the companies that are big enough to be on the S&P 500, but aren't yet, but will be. It's like a magnet. Those ETF flows are magnets. They pull price. So if the Russell 2000 is purely based on size, S&P 500, you have to show 2 or 3 quarters of profitability before they'll include you. So profitable companies that are over $20 billion that aren't on the S&P 500, as I redo the punch card stocks list, there's going to be additions to fit that criteria. And I've got a couple more micro caps that make sense. However, Ametis and Spire, and some of the other ones that we're already in, those are, they just look like they're huge potential winners next year. Like stocks that go up 2, 3, 4, 500% sort of thing. You know, people always go, well, how can you project that? How could that happen? Dude, it happens all the time. It happens all the time. Micro caps become small caps, become mid caps, become large caps. Take a look at some of the big tech companies now. 40Xs and 30Xs and 50Xs over the last 20 years. All kinds of 10Xs. If you focus on those types of companies, the companies that have that type of total addressable market to play into, if they just become one of the top companies in that field, that's all you need to do. All these folks out there, I'm just looking for an 8% dividend. Yeah, most of those companies are shit. There's a handful of good ones, but it just doesn't work that way. When those companies fall off a cliff, they fall to the bottom. I always like to throw out the cereal companies. Who eats cereal anymore? All right. The Global Trends ETF report, if you haven't read it yet, read it. I think these bullet points are pretty spot on. Expect the dollar to remain strong long term. Call it the millennial dollar, around 100 on DXY. Go above and below, but the magnet is 100. There's a long list of reasons why. Expect the bullish trend to continue. Expect the Magnificent Seven to keep doing well. Just because they're big, they're going to get a lot of that index money. But then all the way down to the small and mid caps is probably where the biggest opportunities are. And Bitcoin is real, and you need to respect that if you haven't been convinced already. Just a couple of highlights. Teresa's chat magazine. If you're not visiting the chat rooms, you're missing out. You should be. Somebody asked, should I be selling covered calls of Spire Global because it is overbought on the weekly chart? Well, what's the corollary to that? What do you do after you look at the weekly chart? You should probably look at the monthly chart, right? So the weekly chart's overbought because it's rallying. But if you take a look at the monthly chart, it's not even close to being overbought. So could you get a little jitterbug down on the weekly? Sure, come back down here. That might take a week. Spire Global is one of those stocks that can go up 3, 4, 5, 600% just to get back to where it was. They keep getting contracts. Their annual recurring revenue is still high relative to their market cap. Spire Global should go up 3, 4, 500% in the next couple of years. Will it? Who knows? Investors are silly. But based on the fundamentals, yeah, they should go up 3, 4, 500%. Easy. But investors are silly, so who knows? What probably happens with this stock, just like it does with every other stock, is you go through a period of basing, people who are angry, and then it starts to go up, and then it really starts to go up because people chase. And then once the chase is on, you, as the intelligent investor, have to figure out what to do with it. I always use exact sciences. When exact sciences got to 70, I said the easy money was made. Remember, I was buying that stock at $1.65, and then when it came back down to 5 after a rally, right? I was buying it for a long time. Sold some, bought some. Then around 70, the article's out there. It was right in here somewhere. There you go. Let's help folks take profits in here because the easy money was made. Well, it's been choppy ever since. So we'll find a FOMO rally at some point for a lot of our stocks. Make the decision that the easy money was made. Right now, this is the easy money. You hate it because it's not going up yet. But if you give these stocks 3, 4, 5 years, some of them 10, you'll get these massive rallies. If you seed and sprinkle your portfolio over the period of years, you'll always have something that's doing pretty well for you. And then you recycle it for the next great 3, 4, 5 year idea that might turn into 10. It's a pretty easy way to invest. You can trade. You can worry about the next 12 months. You can give up on stocks because, it just hasn't gone up in like 15 months. Months. Use the word months. Think longer term. For most folks, again, unless you are a superstar trader like Shooter, don't compete with Shooter. If you have the time to try to learn from him and copy him, you should do it. But if you don't have the time and it's not your, thing, don't do it. Think in 3, 4, 5 year periods, and you'll do very, very well. You'll be better off than at least 80% and probably 90% of the investors out there. I've been a top 10% investor. It works. Buy big upside. Every now and then you get a dividend with that. Innovative Industrial recently. But usually you're just looking for a good idea before the FOMO happens, and you wait. And eventually there's a trader narrative. There's somebody with big money, and a big Twitter following that'll pump it up for you eventually. Stick with great ideas. Punch card stocks. If you can only buy 20 stocks in your lifetime, you think about it a lot differently. That's not a limitation. However, we know statistically that 20 to 30 stock portfolios have done the best over time. Combination of big upside and similar risk to the market. There you go. So winning formula. All right, take a look at the chat updates if you haven't been in the chat room. This is the one from last week. Talked about Metis and Bitcoin. A lot of good stuff out there. So with that, have a great holiday season. I'll be talking to you just a little bit less, but I'll be writing a lot more. But I think that we are on the verge of some big, big wins in the next couple of years. And then we have a crisis because that's how it goes. All right, back with the major markets with Shooter in just a minute.